So good morning, everyone. For those who don't know me, my name is Helena Nat. I'm the Executive Director with the Greater New York Chamber of Commerce, and we are so excited for today. Going global with your business is really important in this day and age. And we have right now, the greatest presentation about to happen. We have Richard Foy, who is the Regional Director from the Export-Import Bank of the U.S. And what the information here is to provide for you is for you to take away how you can take your business and use the tools that Richard is going to be providing to interact globally. Now, you know what? I always hear from a lot of businesses, it's only for the major corporations, and not anymore. Richard and I were just talking about this. Technology has really made it easy for us to do business internationally. So right now I'm gonna, by the way, everyone, I'll put it in the chat. There is a chat going on. You can put your questions in the chat. I'll monitor the chat. If it's something that Richard is talking about during the time, I'll ask him. If not, we have a Q&A around 10:45 or after his presentation. It is being recorded. I get that all the time. So it will be on Chamber TV, and there is a PowerPoint presentation. So I'm going to right now introduce Richard Foy. We're so excited about this presentation, and you make such a huge difference in the day-to-day, I would say not their life, but their livelihood for running a business. And part of this is a whole program that, the Greater New York Chamber is proud to provide this information to build back New York. And it's not just build back New York for the last 2 years, it's building back New York in the future. So going to the future. So Richard, take it away. Thank you so much for your time. And again, everyone put your questions in the chat and we'll try and get to them.
Excellent. Thank you so much, Helena. Thank you for having me. My name is Richard Foy, Regional Director for the Export-Import Bank of the United States, EXIM. I appreciate the opportunity to be here and present the important programs EXIM has for U.S. exporters. And while I don't want to say no one knows about our programs, I'll say too few people are aware of the important support that we provide. So I welcome these opportunities to reach exporters, and I hope you'll find today's presentation informative and useful. During the presentation, I'll let you know what EXIM is, who EXIM is, why we exist. We'll review some issues exporters typically have and how our programs can help overcome them. I'll review at a high level a few of our programs so you get a better understanding of how they can fit into your business, but I won't go into a great level of details. I don't think that's necessary at this stage. That said, I always welcome phone calls, emails, asking me specific questions about your business. I think today's questions will be more general, maybe digging a little deeper into our programs. So you'll have my contact information at the end of this, and we can discuss during the call or after. If that sounds good, we'll just begin. So EXIM Bank, we're a U.S. federal agency. We were established in 1934 as part of the New Deal. The objective was to grow jobs through export. So as part of that, our focus is always on the U.S. jobs. And we'll get into that a little bit further when I explain the U.S. content requirement of the bank. We fill gaps in the finance world. We don't compete with the private sector. We very much work hand in hand with them, pick up where they are a little uncomfortable, and fill other gaps. The goal is to level the playing field for U.S. exporters when they compete on the global stage for business. Some ways that EXIM can help. We try to improve your competitiveness by ensuring receivables, so giving you a certain level of confidence to do business on open payment terms. We can assist in obtaining pre-export working capital to produce or procure goods for export. And we can support financing of capital equipment to your foreign buyers, so term loans for those larger equipment deals. So we get into, let me just move something on my screen so I can see. Okay, so here are some needs and solutions, because I think the presentation name was solutions that we provide. So when you need funds to fulfill orders, our working capital guarantee program works well. It basically gives confidence to lenders to make a loan directly to you. We don't make the loans directly. We guarantee loans that a private lender, well, like Chase or Wells Fargo or, similar would make to you. When you need to extend credit to your buyer, many folks are very risk adverse, and they say, well, send me the money and then I'll export the goods. And that can be very limiting. So we allow you to extend open payment terms, and we protect you against non-payment with our receivable insurance. And then again, our foreign buyer finance that I alluded to before, our medium and long-term insurance, if you're holding a receivable, or a loan guarantee if a bank is financing it, would be our solution to that issue. We are small business focused. So as Helena said earlier, many people think XM Bank, I've heard of them. They're the Bank of Boeing. They handle large transactions, and they're not interested in small business. In fact, over 88% of our transactions are for small business, and over 50% of those were under $500,000. We have over 1.5 billion in authorizations specifically geared towards small businesses. So we are very much small business focused. Most of our activity is for small business. It's just we just keep it secret, I guess. Minority and women-owned business outreach as well. We're very focused. While we don't have specific programs or different programs, it's been important for us to make a focused effort of outreach, because we identified that these groups were attempting to export, needed the support of XM Bank, but they were not aware of us. So we do in 2022, we did over 160 outreach events similar to this, and almost $340 million in support was given to these specific groups, as outlined on the screen. I think it's a great effort and a great outcome from the effort that we've made, and we keep putting more resources towards this. And I think that's great work that particular group is doing. So again, the export challenges that people face, when they need cash to buy the goods, or buy the raw materials, or pay the staff to make these products that they're exporting, they need to go to their bank. And what often happens is their bank is not comfortable with the fact that you're exporting the product and the receivable is foreign, and there's a lot of difficulties working with a bank. But our program, our working capital guarantee program, and the SBA's working capital guarantee program really moves them closer to making the loan. And what it does is it provides a guarantee to the lender, so that if there's a default by you, the exporter — I feel like I'm talking to exporters, although I understand we have non-exporters on the phone, service providers and whatever — they get more comfortable making the loan to you, because if you default, we will pay them 90%. So they are at risk for 10%. I guess that keeps them on their underwriting toes. Otherwise, if we gave them 100%, they'd probably just write everything, and we'd be not necessarily responsible in that way. So that's an excellent program. When buyer wants credit terms, again, our credit insurance program is very powerful in that way. And you know, I'm just going to skip ahead of this slide because I think it's a little redundant, and get into the specifics of the program. You can see here that our products, or how we support exporters, really covers the spectrum from working capital guarantee, which is pre-export, to post-export financing, which is, you know, the insurance and the guarantee and direct loans. So we get into export credit insurance. I love this program. I think it's the single best program that we have as far as really making a difference for exporters. And I say that because when I started with the bank, I think it's 8 years ago, I was curious, you know, we would set up a program, export policy for an exporter. And I was curious, how did it work out? Because I kind of set it up and then they work with a broker. So I would call them, say, hey, how did that work out for you? You know, we set this program up. You're getting new buyers, you know, what's the deal? So on a regular basis, the feedback I would get was, yeah, we've gotten new buyers from this, but the real impact has been with our existing buyers. The buyers that we required advance payment from, now that we're able to extend them open payment terms, their order has tripled in size, generally speaking. And that makes sense, right? Because you have now the ability for these buyers to receive the product and flip it, right? They're able to, you know, increase the price, realize the gain, and then pay their bills. So when they're able to get more product, they're able to sell more product, and really build up the market for your product. So it's that one thing always sticks with me, the fact that it increases sales with your existing clients. So what is it? It's an insurance policy. It covers the receivables generated by an export sale, and it protects you as the exporter against non-payment. So when you start with a prospect, okay, yes, I want to buy this widget from you. In order for me to buy it, I need 30-day terms. Okay, you get comfortable with that. You sell to them, open payment terms, they pay you, no problem. If they don't pay you, that's when you come to us, and we'll pay you just like, you know, you would any other insurance. So what it enables you to do, though, is be competitive. You know, I walk a lot of trade shows, and foreign buyers are always around the trade shows looking, and terms are discussed. Oh, I'd like to buy this. You offer open payment terms. You offer credit. Many of those people, small businesses, they say, no, we would need you to pay for it in advance, and they walk on. All right. Other parts of the world, they're very comfortable extending credit. They're extending credit because they're very comfortable with credit insurance. In fact, the rest of the world uses credit insurance far more than the U.S. Does. So another good point about credit insurance is, once you have that receivable that's insured, well, it's an attractive piece of collateral for a bank. And what that means is a bank can advance you money on that. So if you have a $20,000 invoice, for example, well, they can advance you, you know, say 75% or more of that. So knowing that you're going to get paid either from the buyer that's been invoiced to, or from XM Bank. So this slide is a good visual for the spectrum of risk. So on the top, you have the seller, that's you, all right? The green on the left, that's when you cash in advance, all right? You're in a great position when you get cash in advance, because you got cash in hand and then you have to sell the good. But on the flip side, below it, the buyer has very high risk. They've emptied their bank account, right? They've given you what they have, in hopes and with all faith that you are going to send them the product. And if you don't, they're out that money, right? That's catastrophic potentially. You know, and on the flip side, open payment terms. Now you're at a very high risk as the seller, and the buyer arguably is a very low risk. So we look to kind of bridge this gap, and that's what export credit insurance does. Is it gives you the ability to give them the payment terms, but not worry about non-payment, so to speak. So this kind of flow chart, if you will, you identify an international buyer, and you sell them on, you agree to the payment terms. They accept your payment terms, and it's approved by us, XM Bank, and you ship the product. There's no real difference in what you do. Unlike letters of credit, for example, where there's a lot of document issues that you have to make sure are to the T, otherwise it jeopardizes your ability to get paid. We have a requirement that you retain the documentation, bill of lading, airway bill, original order, invoice, and so on. But we don't interfere. You don't have to do anything else. Once you've sent the product over to your buyer, you report the shipments the following month, which is great because now the payment of premium follows the revenue. It follows the sale. It's not like it's not like your auto insurance where you pay your full amount, and then you enjoy the benefits of the insurance. It's just as you go, a payment. And obviously we hope that they pay, and you just continue doing your business. If they don't pay, well, then you come to us and we open a claim, and we settle with you. We settle with you within 30 days. And we go after the foreign buyer to recoup that. Remember, this is taxpayer money we're dealing with, so we want to be responsible for
Richard,
that and get it back. Yes.
Richard, I have a question because it's about this slide. Are there deductibles or co-insurance for the export credit insurance? Premiums or other costs for the insurance?
So there are, and actually, I think in a couple of slides, I go into that. But yeah, our programs are like the high points of our program is pay as you go premium, no deductible. All right. So we do have more custom programs, I'll say, where you can buy down the rate. By having a deductible, but our standard programs have no deductible. It covers 95%, but we'll get into to that. First, I'll cover what the policy actually covers. So, and the benefits of it. So risk protection, it protects you against non-payment for commercial and political risks. We'll go into what those are in a couple of slides. As a sales tool, this is invaluable. As I said before, you can confidently say to this prospect or your existing buyer, I can sell to you on open payment terms. And you know that you have the government backing you. And as a financing aid, that receivable becomes an excellent source of collateral. We assign that to the bank, and they can advance money against that piece of collateral. So what's covered? Commercial risks, insolvency, bankruptcy, protracted default. The protracted default is basically they're not paying as agreed. Okay, so a lot falls into that. Political risk, war, revolution, insurrection, currency transfer risks. So if they're not able to get US dollars out of the country to pay you, that's covered. Cancellation of an import or export license. This is something that's not generally thought of by exporters, but it does happen where there's a cancellation of a license. There's an inability for your buyer to bring the product into the country for a variety of reasons. If they're not able to receive it because of government interference, I'll say, that's a covered cause of loss. We pay you on that. Disputes by the buyer are not covered. So if they ordered, I don't know, 10,000 pink sweaters and you sent them blue, and and they're not paying you because of that, that's something that you would have to work out, beforehand and before it became a claim. So if you did work it out with them and they still didn't pay you, then it would be a valid claim because it's no longer disputed based on a commercial risk. They're just not paying you. So we have a few different programs within the export credit insurance. Our multi-buyer is what we call a whole turnover policy. It's an entire export portfolio. So wherever you're selling on open payment terms, our expectation is that we would be covering it. We provide 95% coverage no deductible. And it says here for small business policies, because we have the ability to have a deductible for other policies. Pay-as-you-go premium, buyer approval must be given prior to you exporting. We can get into a program where we give a discretionary credit. So if you have some controls, some credit controls in place in-house, we can approve that process and say give you, a certain limit where you can approve that buyer without coming to us first. Our multi-buyer select risk, so that's a negotiated portfolio. If, for example, you have few customers in the UK, you're very comfortable with them, you don't need to insure those invoices, we're able to carve those out as well. And then a single buyer policy. So if you have one, this is where our gap fill really shows. Some people have a private policy with Coface or Euler or similar, and their underwriter there says, you know what, where you're shipping to, we're not comfortable, we won't give you the limits that you need, or we can't support that high of concentration of risk. So they could come to us. We're fine having that risk selection. We underwrite that single buyer and insure it. We cover 90% on that because we do have a concentration of risk. It's an annual policy, and you can ship to that single buyer as many times as you want throughout the year. But it's only if you have a second buyer, you put another single buyer policy in place. So that pretty much covers the export credit insurance at a high level. A working capital loan guarantee is a guarantee to a commercial lender. All right. So it's important to understand in this scenario, the bank is really our customer and you benefit from that relationship. So like on the credit insurance, you're our customer, you benefit directly from any payment. In this case, you benefit from the loan guarantee, but the bank is actually contracting with us. All right. It allows them, as I said earlier, it allows them to confidently make a loan to you because they know if you default, then we're paying them back. Okay. Then we're going to work it out with you by, working through your collateral or any other, guarantees that you have for us for a payment or set up a payment plan, whatever. But the important thing is it gives the bank the confidence to make the loan to you. It allows you to unlock cash flow and fulfill sales orders so you can take on new business. And I'm going to go into a couple of slides, a key difference in having us guarantee the loan as opposed to the bank just giving a loan with their normal structure. And it says here, exporters can borrow more with the same collateral. The performance in bid bonds is an important thing that I do want to touch upon because typically, and standby letters of credit. Usually these are in the form of a standby letter of credit. And I'll use advance payment as an example. If you are, if you have an order, it's $100,000, or say it's $200,000 and you require 50% advance payment, your foreign buyer is going to say, well, all right, how do I know you're not going to beat me out of this? Just take my $100,000 and run. We need some sort of guarantee. Standby letter of credit would serve that purpose. What it does is a bank says, okay, park the $100,000 in this account. We draw up a document that says, if you don't do this, this, and this, then your buyer gets to claim that money. All right, that's as simplified as I could probably make it. That's it, essentially. However, you asked for that $100,000 because you needed it to build the product or procure the product that you were going to sell to them, right? So parking the $100,000 into an account does little for you. You may as well not have it. So with our program, we only require 25% collateral to secure that letter of credit. So in that scenario, you would need $25,000 in collateral to secure the $100,000 letter of credit, leaving you $75,000 to put to work. Okay, so it provides a 90% guarantee of repayment, principal and interest on loans to the exporter. It can be set up as transaction specific. So if you're building a machine, all right, for export to a buyer, or if you have regular business, it would be more appropriate to set it up as a revolving line of credit, and they monitor certain collateral that you would have. We have no minimum or maximum amounts. And I want to key in on this, because just because we don't have a minimum amount doesn't mean the bank does. As I said before, the bank chooses us, right? They, on lower loan amounts, they would likely choose the SBA program if they were going to use a guarantee program at all. Usually we see this about the $1.5 million mark, $2 million mark and up. They'll start using EXIM Bank. Under that, they use the SBA program a little bit more. There are a few differences between the two programs, but not really significant from the exporter's perspective. So loan support can be made. Yeah, I'm going to go through the inventory and stuff. So I'm just going to go on to that. I think I already went through this. You export, you need working capital. Lenders with delegated authority are lenders that have the ability to write a loan with our approval without actually presenting documents to us for approval. We give them the pen, so to speak, because they are proven responsible. They know our program, they know our processes, so we're fine. So that's a streamlined process when you work with a delegated lender, and they're available on our website that you can see, or I can introduce you. All right, so this is what I want to get into is collateral, because this is very powerful. A couple of slides I'll see. Typical export inventory, you'll have raw material, work in progress, finished goods, right? In this scenario, you have 200,000 of raw material, 200,000 work in progress, and finished goods, 600,000. A typical advance rate without EXIM Bank is 20% on raw material, nothing on WIP. Work in progress is worthless to the bank. They can't really liquidate that, right? Finished goods, 50%, because they're going to have to discount them heavily when they liquidate. Open AR that's naked, has no backing, they won't advance money on foreign AR. If it's backed by a letter of credit, they'll advance 70%. Now, with EXIM Bank, though, we allow them to advance at a much higher rate. All right, and it's really, we're backing this, so they do it. 75% across the board on raw material, WIP, and finished goods, and 90% on foreign receivables. So you see here, you have $2 million in borrowing base. Typically, you would get 750,000 or so out of the bank. With EXIM Bank, you're getting over 1.5 million. All right, so that's very powerful when you're seeking working capital to grow your business. There's never enough. Our medium-term financing is this is designed for capital equipment sales. So if you're selling, a large machine to a foreign buyer, and they need terms like a term loan, multi-year perhaps, this is a great program for them. 85% will finance 85% of that, or the U.S. content. So if it's 60% U.S. content, our maximum amount of support would be 60%. 15% minimum would be brought in by the buyer. That's their equity injection. It can be secondary finance. We offer repayment generally up to 5 years, but we can go 7 years on certain types of products. And our amounts are usually 25 million or less in this program. That is 25 million or more requires board approval, and it usually morphs into a different program, like a long-term program. So we have long-term financing for projects if they're building a power facility or something along those lines. we do that. So what are the restrictions working with XM? We cannot support military or defense related products or obligors. So if it's a defense, ministry, we can't sell to them, even if it's uniforms, we can't sell to them or support sales to them. Must ship from a U.S. Port, and we are open in over 180 countries. We have a country limitation schedule, is what we call it, on our website. So you can go on there, you can see exactly, do we support the country that you're exporting to? Are there any notes, any caveats that you need to be aware of with our support? That's all on our website. And that's really what I just said, I guess. Eligibility criteria, this is another important thing, so bear with me. Products shipped from the US, they have to have 50% or greater US content. This goes back to when I first started the presentation. Our focus is to grow jobs through export. So it's vital that the products that we're supporting are made here in the US. That's why that 50% US content requirement is there. Does include that is on a cost basis. So it includes labor, your overhead, but not the markup, not your profit. Okay. So it's a cost of sales. We look for a 3-year operating history and a positive net worth. That's mostly on the finance side, on the loan side of things. We have exceptions, or we can get involved with younger companies on the credit insurance, because really we're looking more at, one, your ability to export the product or service, but we're looking at the foreign buyer's ability to repay on the insurance product. You do have to have a DUNS number with Dun & Bradstreet, and a new thing is a unique entity identifier that you get from sam.gov. That's a new process that all federal agencies are requiring. When you're doing business with the government, you need this number. And we look for the request to be in proportion with the exporter size. So if you're, a one-man shop, and then you're coming to us with a $25 million deal, and you've not done those deals before, well, that's going to be a little difficult to do. But I mean, if you're a one-man shop and you have a history of doing larger deals, maybe 10, 15 million, and now you're stretching there, well, you have some history. That's in proportion with your exporter size. So this is a great slide. Take a picture of it, or I think we're sharing this presentation. Feel free to reach out to me if you have any questions about what we've covered today. I know I went through this fast, but I don't think you need to spend a lot of time on these particular items. I think it's enough where it'll trigger something in your head and you say, okay, this makes sense. I think this will fit in my business. Let me call Rich. That's how I presented, you designed the presentation. Hopefully that's how it was received. Feel free to call me. I think we have questions from the audience slide too.
Yeah,
any questions?
So Richard, go ahead. I'm sorry.
No. Do we have any questions? I think you were monitoring, right?
Yeah. Just so you know, this is being recorded. It will be on Chamber TV, early evening, and you will get a copy of the PowerPoint presentation. They will send it to you. So a lot of that was being asked. Hold on for 1 second. Someone wanted to know, what about shipping air? I'm going to just throw these out. So this way, what about shipping air? Someone was asking what the fee the commercial bank will charge to underwrite it, EXIM bank loans. And also someone wanted to know, which was really interesting, and I think you covered it. They said, you talk about exporting, but what happens if does this apply if you're doing shipping, doing business with products? I'm trying to find that. Overseas being shipped into the United States. So if you're buying products overseas being shipped into the United States, so it's importing. if
Right.
that was applicable. So those are the couple of things I'm still going to go through, but you can answer those.
Sure. So the import question, our focus is on exports. The name is confusing, but remember, exports only exist if there's an import. So given that we do provide support to well, our focus is US exporters, but we provide loans to the importers of US products. That's how I justify the export import name, but we don't we don't support imports into the US of foreign products. We do support air. I think that was one question. We support air shipments, of course, air and sea, land. If you go in Canada, Mexico, export is an export so long as it's leaving the US. We can support it to the countries that we have outlined. The fee for an export loan is it's stepped. All right. So it used to be a point and a quarter that was charged by the bank, because again, the bank pays it to us. You don't directly pay us the guarantee fee. The bank pays the guarantee fee to us. Obviously, they pass it on to you. But any rates, interest rates, or fees are negotiated between you as the exporter and the borrower, and the bank directly. We're not involved in that. And I said a point and a quarter. It used to be. Now it is a step, depending on the loan size. The fee is gradated. So I don't know exactly what the steps are. I believe it's on our website though. And that if that person that asked that wants to reach out to me, I can get them a direct answer. I think I missed one question though that you asked.
No, I think you got that. It's someone wrote, it sounds like he has solutions that can replace standby letters of credit. Does he have the products that cover foreign currency gains or losses? Is that a question?
Yeah,
that
so
they-
FX exchange is not something that or the FX risk, foreign exchange risk is not something that we cover. We can provide support in foreign currency, so it doesn't have to be invoiced in US currency. So if you wanted to, export an invoice in euro, we can do that, but then you'd work that out with your bank as far as hedging your foreign exchange risk. The standby question, yes, we don't. So our program certainly helps support standby letters of credit because it requires lower collateral level. It does often replace standard letters of credit, where you would basically entrust a bank to be the mechanism by which you would receive your money, and that would be your security, if you will. Many people do that because they want an intermediary in place to make sure that they get paid. Many people are transitioning away from letters of credit and utilizing export credit insurance instead. And the
Sounds
fee,
good.
I know it wasn't asked, but I will address a fee for export credit insurance. Although it varies on our multi-buyer policy, it's about 55 basis points for the 1 to 60 day bucket. So if you have a $10,000 invoice, it'd be about $55 to insure, not a lot.
Where would they go? Someone said send details about loans you can, so they represent their customers who need this. Where
Yeah.
would they go? Would you send them information, or where would they go so they can offer their customers for potential financing that they might need? Will you send them the information, or should they send their clientele or their customers to your website? Guide us on that.
Yeah. I think, all right, so our program is not only secret amongst exporters. It's also secret with bankers. So what I found, the best thing is to reach out to me where I can understand the need, kind of distill it into bankable terms, understand who the exporter banks with so that we can present it to their bank. All right. Their banking relationship should have first crack at supporting them with any loans. Obviously, if they're not interested, they can't support it, then we will help the exporter identify a bank that is interested, to get them the financing. But I've realized the best success when they work through me, and then I'm able to hand it to a lender directly with the rest of my team on the lender account manager side.
So that sounds good. And I see Shannon is corresponding also to give just posted your information so they can get in contact with you. We have a couple of, I see Chase is on here, community partner with the Greater New York Chamber of Commerce, and they're doing, they're assisting. So that's nice also.
Yeah, they're
Any
great.
other, any other questions? I'm just scrolling through. No one's, oh, let me go to the Q&A. Hold on for 1 second. What about if okay. What about if I invented my brand product overseas and I want to export it? So that's, I think you kind of touched on that.
Where is it being produced? If it's being produced here in the US, we'd be happy to to support that. If you're producing it overseas, look at the possibility of producing it here. US goods are, really highly revered, and you may unlock potential markets by producing them here in the US.
Okay. Someone has a question about XM credit insurance. If you if orders previously, unless orders were all from one country, where you can get aggregate orders, or orders were greater than 100,000. Okay. Is this still the case? Does that make sense? I'm trying to read the question so it.
We don't. I'll welcome that person to call me, and
Okay.
I'll try to answer what I think is most relevant. We don't have a minimum. We don't have a minimum invoice amount. So if you have $1,000 shipment that you want to insure, same rate, insure that shipment. It applies the same way you reported. So, I don't know. Please give me a ring if that didn't answer. I'll be happy to go through the question with you.
Oh, okay. Because I think a couple of people asked if there was a minimum. So, okay.
Minimum.
Any other? I think we got.
And
any other questions?
I'll just say, so I did say, no minimum, no maximum on the loan size, and then I had a caveat, right? Because the lender ultimately chooses. On the credit insurance side, that's all us. We underwrite it. It's our paper. It's all in our control. So when I say there's no minimum, there's no minimum. It doesn't go to underwriting and then they say, well, you know what, we'll do this if it's 5 times as much. No. You have a policy in place, you have $1,000 order, you have a $50 order, that you're sending. You absolutely, you can insure that.
Okay. I'm just reading over. I think we covered, any last minute questions before we close up? Okay. So, well, Richard, thank you so much for your time. Everyone is, I'm looking at my cell phone because a lot of people email me and they're like, amazing presentation. Thank you so much. Thank you for bringing this information to businesses. And what was really interesting is what you and I talked about, and you hit on here. You know what, the small and medium-sized companies, I'm getting a lot of feedback that they really didn't have access to this information. and they thought it was just for, big business, which is really good that we brought this to the forefront, because it is for every type of business, which is really amazing.
Thank you. I'm grateful for the opportunity. Thanks so much for having me.
Thank you so much. And Nicole and Shannon, great working with you. And like I said, this is being recorded. It will be on Chamber TV. And I believe that Richard's office will be either I will be sending out the PowerPoint presentation, or it will be coming from Richard's office. So again, thank you everyone for joining us. And make sure that you enjoy your weekend, stay safe. And if you ever need anything, we're here for you, the Greater New York Chamber of Commerce, representing 30,000 different business and civic leaders. Tuesday at 10 o'clock, we have an online networking if you want to join us and grow your business with us. Richard, again, thank you so much. We appreciate your time, and we appreciate all this valuable information to help the businesses grow.
Thank you so much.
Take care, everyone.